Good morning and welcome to the Capital Metals PLC project updates. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and now I'd like to hand you over to the Executive Chairman, Greg Martin. Good morning to you, sir.
Thanks, Alessandro, and welcome everybody to this update. So the heading of our latest presentation, which we released only yesterday on the back of quite a detailed RNS on a project update, we call Approaching FID, so Final Investment Decision. And what that means is that we need to have everything in place. So all the approvals, the government approvals, we need to have all funding in place. We need to have all our studies, our technical studies, logistics studies done so that we can present that to the board, and the board makes the final investment decision, which then enables you to start construction. We're pushing hard to get that done by the end of this calendar year, so starting construction in Q1 of next year. And I think, as you'll see during the presentation, we are pushing hard and we're confident that we'll get there. So I suspect a lot of you know the story, and a lot of you are attracted, as I was, right from the beginning, to the grade of this project. It's one of the highest grade projects. Excuse me, I'm not touching that. It's one of the highest grade projects in the world, and right now we're a little red dot, and we're working on making that a much bigger dot. And in fact, we had finally had a deep drilling program in the first half of this year, which we've announced 3 phases of results, which is demonstrating that is going to happen. That dot is going to get a lot bigger. We're working on a resource upgrade and for the initial mining area, which is where we've just drilled, and then ongoing drilling. We will do updated resource estimates each time we come out with a new phase campaign. So the project is on the easternmost part of Sri Lanka, and that is probably the most remote part of the country, and not a huge amount of competing land use, and probably one of the poorer areas. So the jobs are welcome. We have been there since 2016, when we acquired the project from locals that had been exploring there since 2012. So just recently we put out a new model, and that model has taken us quite a long time to do. The last model we put out was off the back of the preliminary economic assessment in 2022, and Stuart Forrester, our COO, and Mineral Technology is working very hard to make that a much more functional model. It's a planning model, not just a value model, so that we can look at changing the capacities, changing the mining rate, changing the processing rates, bringing in other phases of separation earlier. And so what we think is on a fairly conservative base, our base case has gone up from 155 million to 180 million. And that's after taking into account an increase in the tax rate from 14% to 28%, and from the royalty from 7% to 9%. So we factored in about a third increase in the resource for that base case, and for the upside case we factored in 2/3. So just to touch on that resource, I'll actually go back to that slide. So we've got 17.6% grade, that high grade, it's at 17.2 million tonnes. But that is only drilled to a depth of average depth of 1.6 meters. When I say drilled, it was done by hand auger, and that couldn't go below the water table. The water table obviously varies, but the average is 1.6. So we did some drilling, deep sonic drilling in 2018. We were getting down to 14 meters with grades around 30%. Of the campaign in the first half of this year, we were getting down to 15 meters. I think we averaged about 10 meters, and we were seeing grades of up to 60%. Obviously not everywhere, but some very encouraging intercepts which we have put out to the market. So we that 10 years of initial mine life, I'm quite sure we're going to pretty confident we'll double, triple the resource, and hopefully this will be a 30+ year mine life project. So we've touched on where it is. I think one of the bigger things out of here is that once we go through that first concentrate process, which is a very simple process of just gravity, adding water, turning to slurry, and gravity through a series of 48 spirals, a three-stage process through those spirals, will turn that 17% grade into a 90% grade concentrate. Highly in demand. And with our product in particular, it's a very clean product. There's no slimes, which means clays. And we've spoken to a lot of off-takers, and we're very confident that the demand will be there to acquire it. At the moment, we're focusing on off-takers who are interested in providing project equity and also a prepayment facility whereby they would prepay 6 to 12 months of offtake and get a percentage of exclusivity of the total production. So this is a bit of a snapshot of the outcome of the revised model. As you can see, a very robust IRR of over 70% and 98% IRR for the upside case. So the return from this project, the margins on this project are outstanding. And as I said, that's just based on the current resource with the 30% uptick or a 2/3% uptick. Earlier this year, we announced actually in May that after a long period of due diligence and after actually a long time of trying to find the right partner in Colombo, that we signed a deal with Ambien Capital. And Ambien have arranged for 2 lots of 2 million. So they put 2 million in first, and then brought in friends, co-investors for another 2 million that we closed off earlier in the month. And so we now have raised 4 million from them. As a group, that gives them about 20% interest. And we raise so Sheffield Resources, our 10% shareholder, had a top-up right or an anti-dilution right for 10%, and they exercised that both times. So they're still at 10% as well. So right now, very well funded. We've got sort of over $5.5 million in the bank, and that is more than enough to get us through to FID, and actually will contribute towards some of the fairly low capex, which I'll touch on a little bit later. So Ambien, a group that invest, they're a conglomerate. They're actually mainly backed by a fund that we got very close to. And the fund was founded by 3 guys, 2 Sri Lankans and an Indian that actually were brought up in Australia and educated in Australia and had their early careers in Australia. So highly qualified careers in Australia. Moved back to Sri Lanka, set up a fund, and now have over 200 million under management. They co-invest in Ambien and in projects like ours with Aravinda De Silva, who's the legendary cricketer who won virtually single-handedly won the World Cup for Sri Lanka in 1996, and is now a very active investor and successful, as the guys call him, a better investment banker than he was cricketer, which I find hard to believe. But it's been great to have him on board. He literally is on the board, as is Savant Sebastian, who joined us from the ACP/Ambien group. And we've been working very closely with them during the due diligence and also since then. They are just able to have so many conversations behind the scenes with our stakeholders, get a lot more clarity on those discussions that are taking place, the factors that we need to be aware of, and all towards aiming to get the last 2 outstanding approvals that we need to get to that FID point. So I presume most of you would have some idea of where mineral sands goes, but there are some critical mineral uses, but I wouldn't call it a critical mineral industry. It's pretty much goes to pigments that go to paints, ceramics. There are some uses in titanium metals and some other more advanced uses of zircon products, but it's it is pretty much a GDP-based revenue impact on the pricing for each of our products. So our main products, ilmenite, we're about 40% ilmenite. Actually, I'll come back to that when we talk about the resource itself. So as I said, it's been quite a journey, and we are now getting very close to that final investment decision. We've got the environmental impact assessment. We've got 2 mining licenses. We're the most advanced development project in Sri Lanka for mineral sands. So we only need 1 more mining license, and we just need the right to be able to actually export heavy mineral concentrate. So those 2 mining licenses, we got them back in 2022, but we want 1 more to just give us enough critical mass to have about 4 years of mining under mining license before we actually commit to that first level of capex. And with respect to the heavy mineral concentrate, we need to get the government to tweak, I'd say. They attempted to allow the export of HMC in July 2023 through a cabinet memorandum, but there was a couple of errors in there that actually made it unworkable. We've gone around, we've pointed out the errors, actually done a markup of their paper. It's quite a simple change. I think they were quite surprised at how straightforward it would be to change it. And we've been working and lobbying on that and hoping that we'll be able to get that certainly within the next 3 months to enable that FID. Very simple. This is off-the-shelf technology. We're not reinventing the wheel here by any means. At the moment, we have approval only to mine to the water table, and we would be doing that by excavation and trucking to the wet concentrator plant. That's sort of steps 1 and 2. We are working on being able to mine below the water table, and ultimately there's a number of areas that is conducive to dredging, and dredging reduces your cost by about by up to a third, or down to a third of what you would do by the truck and shovel method. So encouraging discussions. I noticed there were a couple of questions around this. Encouraging discussions on moving to below the water table. In fact, there's a new minerals policy coming out soon, which we know their primary objective is to better understand the resources that are in the country across all of the commodities. And that means they'll be encouraging us to go to depth and not worry about the water table. I'm not saying not worry about it from a mining perspective, but just to understand what the resource is, and then so they know the value in country of what they've got, and so they can prioritise decisions off the back of that. I'm sure we'll talk more about that when we get to the Q&A section. As I said, off-the-shelf product. This is something from, we're working with Mineral Technologies, who have proprietary spiral manufacture just out of the Gold Coast in Queensland. And that plant is what we call an off-the-shelf plant. They make the spirals. They send the equipment to China. It's assembled in China. It's tested in China, disassembled, put in containers, and sent to Sri Lanka. So we're just reassembling it. So it's not a very complex construction. We're saying it's 9 to 12 months. 12 months just buying us time for any issues. But at this rate, we're expecting to be in production by the end of next year. There's probably a closer shot of the plants. You can see they call them spirals. They literally we pump the slurry up to the top, pump the ore and water up to the top. Heavy minerals go to the middle of those spirals, and the lighter the silica, and the clean sand goes back to the beach. So we basically take the black out of the beach and return the yellow. No chemicals, no blasting. It's very straightforward. As I said before, that existing resource from a retail value, from a sales value, it's about 40% ilmenite, 30% zircon, 20% rutile, and 12% garnet. We've actually, since that the PEA we did with IHC in 2022, we've worked with one of the preeminent sellers of garnet, and they have told us that we have a very premium garnet from a hardness point of view and a grain size. So we're hoping to be able to work on that and improve the pricing that we've got in our model. So I touched on some of the drilling that we did back in 2018. So actually, step back. So we've got the resources based on 1,600 holes and 2,600 meters, average depth of only 1.6. So we did the drilling in 2018. We've done the drilling, another auger program in 2021, and now we've got that program from the first half of this year. So in total, there's nearly 600 holes that are not included in the resource. And probably more importantly is those holes at depth, so down to 15 meters, and stepping out to the west, in particular in the initial mining area, that gives us the confidence that we will be able to significantly increase the resource. And also our technical expert, Richard Stockwell, ex-Saluka, working with Placer Consulting, he knows this space back to front and is very confident we can reduce our cut-off grade from a very high, atypically high, as we call it, 5%, to 2%. It's interesting that the global average grade is actually less than 5%. So we were assuming a cut-off grade, I think, that was just too high, so above the global average. So we're very confident that we can go down to 2%. And here are some of the highlights of what we've said, the focus on the initial mining area. So you can see on that map that the existing resource in the JORC resource is in the pink area, and the area where we've extended the resource. We can't call it a resource yet because Richard hasn't completed the calculations, but we're confident that is what we'd call a resource area. So we're now out to sort of 150 hectares as opposed to the 47 we were before. So a pretty significant increase in area, and we are hopeful of coming out by the end of next month with the resource upgrade just for that initial area. So that is about I think it's about 2.5 kilometres of strike length of the total strike length of around 60 kilometres for the project. So it's only a sample, but I think what we're hoping is this comes out and it'll be an indication of how we think we're going to go over the rest of the project. Obviously, it's going to vary from area to area, but we're pretty confident that we're going to be adding to that resource as we continue the drilling campaigns, and they are going to be ongoing, probably right through construction as well. So a lot more focus has been on the community activities. We've really only been able to, with budget and with a team, really only be able to do this justice over the last probably 18 months, in particular since Stuart joined us in the middle of last year. And I really, it's a completely different feel that we're getting when we go there. And I think all the initiatives that the team have been working on, there's a much greater level of understanding, and that's one of the key things that you need to get is education. And I think people are understanding more about the way we're going to approach it, about our sustainable and environmental approaches. And there's still a way to go, but that's an ongoing process, and it's a process that you need to do right through. So very happy with how that's progressing. So here's the board. My background's investment banking and resources, and been in that for 30 years. Bruce Griffin is the chairman of Sheffield, who have 10% of us, and what he doesn't know about mineral sands is probably not worth knowing. And then Sebastian and Ara joined us in I think formally in July, and James Leahy, ex-stockbroker from the UK, and Quan Wei is with the KLK group out of Malaysia, and as their finance head. And the team, principally led by Stuart, ex-Aluka, ex-Comores, ex-Rio Tinto, is a really great operator, very structured, and I'm really enjoy working with him. So our current market cap is around $25 million, so it's about 18 million pounds, and that compares to our base case valuation of 180 million. So that's a NPV per share of about 27p, and the upside is about 44p. So there is a huge amount of upside as we start to capture that valuation. You don't expect to capture your full NPV before you're in development, but the closer you get to production, then the closer you should be getting to that NPV per share. So to wrap up, we're in the resources space. Grade is king, and our grade, as I said, is one of the best in the world. We're fully funded through to the FID and beyond. We are pretty advanced in terms of funding discussions. So the cap, which I haven't actually touched on, the capex that we've got to get into first production is about $20 million. We're looking to raise 25 for contingencies, working capital, etc., of which the plan A is to do that through bank debt and private equity out of Sri Lanka, where there are conversations going on with strategic off-takers that are looking to put in equity and a prepay, as I mentioned before. So we should, with only a 20 million capex, should be in production for 125,000 tonnes of concentrate by the end of next year. So I think, in summary, we've just been ticking the boxes. We've just been doing what we said we would do. We now have a strong partner. We're a bit over 3 months away from our targeted FID decision at the end of the year. I think you'll see a continuing re-rating of the share price. I would have hoped we would have had a better response than what we've had, but our job is to just get on with it. And my view is you deliver what you say you deliver, and the share price will follow. Thank you. I think we'll hand over to Q&A.
That's great. Well, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions. You can do so just by using the Q&A tab that's situated on the top right-hand corner of your screen. Just while Greg takes a few moments to read the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboards. As you can see, we have received a number of questions, both pre-submitted and throughout today's live presentation. And Greg, what I'll do is I'll just hand back over to you to run through the questions, and then I'll pick up from you at the end.
Sure. Okay, so first one, how far to the north and south does the Taprobane discovery extend beyond the current initial mining area? Discovery word's interesting. It was discovered back in 2012, but mining projects are taking longer and longer to get into production. So as I touched on, the drilling in that initial mining area is about 2.5 kilometres of a 60-kilometre strike length. That's probably 1/3 from the top of the project, so most of the project is below that. The more important thing is how far does it extend below the average of the resource drilling of 1.6, and how far to the west does it extend? And that's what we'll be focusing on, have been focusing on in the initial mining area, but over the rest of the project drilling as well, which is good. It's just, as I said, it's going to be ongoing, and we will keep updating you as and when we can have enough information to do a staged upgrade of the resource. Mining, sorry, just jumped around. Mining company share prices respond to active drilling once construction starts, and their plans for continuous drilling at Taprobane during the construction phase. I think I've just answered that. The current strategy for combining asset-level equity debt funding could now change away from the Colombo listing. Is the current funding round still aimed at only phase 1 or a more aggressive timeline to phase 2 and 3? It's a good question. So as we've come out and said, we think there's too much risk in pushing for a Colombo Stock Exchange listing of the project. We were looking at listing 15% of it to raise the equity component, and so we're continuing to talk to them. We still would like to list the project, but it probably makes sense to do it later in construction or more when it starts to get into production. They just don't. Was concerned that they don't understand enough about mining and probably didn't know what questions to ask, let alone what to do with the answers. As to whether we're going to be more aggressive on the funding, no, I think it still makes sense. It makes sense in this industry to do it on a staged approach, and I also think it makes sense in country to get, not commit too much capex to stage one, and then we work together. We make sure we continue to get more mining licenses, because it'll be a rolling process of getting mining licenses. You're not going to get 60 kilometres of mining licenses all at once. You'd be mad to. They only last 10 years, and they can be renewed, but so that will be an ongoing process. I think what will happen in terms of whether we become more aggressive is, assuming that it's all going well, that we would probably, after 6 to 12 months, look to accelerate that phase 2 and phase 3. And Stuart and I have talked about this. We would hope that we could actually jump to phase 3 in terms of the capacity and magnetic separation. So please, can you tell us the update position regarding drilling under the water line? So as I touched on, it's more at the moment under our environmental impact assessment, we can't mine below the water table, but we've been drilling below the water table 2018 and in the program earlier this year. So it's not so much about the drilling, it is more about getting that approval so that we can actually dredge. And as I said, that National Minerals Policy's primary objective is for the country to understand its resources, so regardless of the depth or water tables. Can Ambient assist with approvals needed to get into production and the mining license you referred to? Absolutely. As I said, a lot of it's just about clarity and about having those right conversations, and just it's also an approach. And so we work. We have WhatsApp chats with them 10, 15 times a day, and we have 2 regular catch-ups with them. So, and then we're actually moving into their office on October 1. So we'll be able to access them on a much greater basis. So very happy with that help and how much difference they are making already. Assuming the concentrator is not a mobile unit, has the project secured the land, purchased or lease for this facility? So actually, the wet concentrator plants are they are readily moved, and it's not. Sometimes you put them on skids. We're not planning to put them on skids, but if we want to, we will be able to move them. It's more about the separation plant and where you put that. And we have plans for it yet, but no, we haven't actually secured the land, and that's something that's it's very much a work in progress, and clearly we need to get that sorted prior to the construction. But I think what initially as a backup, we've got the initial mining area, which is under the Coconut Cultivation Board, land owned by the Land Reform Commission. Strong discussions with them for a lease, so we could put it on that land as an initial position for that plant. Excuse me. Does mining of heavy mineral concentrate get any simpler than what CMET is proposing? Look, I think the answer is probably yes. We've had a lot of local people and a lot of Chinese companies say that we could do it a lot cheaper and cut corners, but we're not interested in it. We're going to do this properly. We're going to mine it sustainably. But I think, overall as a process, no, it doesn't get much simpler than what we're doing. It's just our approach to it. Mentioned in the past, interest in other mining opportunities in Sri Lanka. Have these progressed? Well, they've progressed in the sense that we keep talking to them. We need to be focused on our own project, and we are, as I said, the most advanced. So I know a lot of the companies are sort of riding on our coattails of our lobbying efforts and our efforts to actually get the approvals in place and get that new minerals policy in place. And so now's not the time to be committing to them, but I strongly believe that there are lots of opportunities. I know there are lots of opportunities. The big one actually is Lanka Minerals itself, which is the government-owned project at Pulmonite to the north. The country will most likely come out and seek a partner under PPP, a public-private partnership, and we are well positioned, particularly with our Ambient partners, to participate in that positively. They're not ready to do it. It was a real mess. It was poorly run, and there was corruption involved in the old days. So they're really trying to get to the bottom of it and get it in a position to come out and ask for partnerships. Interestingly, and I think this is a very good sign of the fact that the country is open for business in mining, they've just put out expressions of interest seeking that PPP, seeking partners for their phosphate project and also for their graphite project. So I don't think you do that unless you're going to be open for business in that mining space. So what is the implication of reducing cutoff grade to 2%? So absolutely it is going to be a significant increase in the resource. So if you're basically treating everything below 5% as waste, and now you're only treating everything below 2% as waste, you can do the maths. It's a pretty significant increase. I don't yet have the numbers. We'll probably only do it for, and I think, haven't had this conversation with Richard, but I think we should show the actual impact of that on the initial mining area upgrade resource, and therefore the implication, what happens to the rest of the resource. But we'll come out soon with that, and but it will be a reduction in grade, obviously. So you're bringing in more material, but lower grade material. So naturally, you're going to have some reduction in grade. But it's a little bit early to answer that properly. But big picture is an increase in tonnes and a small reduction in average. Regarding the coconut areas, will CMET be asked to rehabilitate with new coconuts or other types of vegetation? It's a good question. It's the area. They make no money out of coconuts. I think that the total revenue is about $30,000 from the coconuts. They also lease it out to some peanut farmers, and they make peanuts literally. So we've said we would offer a premium to whatever they get from their own production. We know that their chairman has been there, and he could see that it is not conducive to coconut growth, and so we're expecting to rehabilitate the area if they want. The land's actually owned by the LRC. It's not actually owned by the CCB, the Coconut Cultivation Board, and we're saying, well, they should have the first right to get it back. We're building nurseries up and down the project, and the idea is we're going to be teaching people about mulching technologies, and it's obviously going to create jobs, and it'll be able to demonstrate just our approach to rehabilitation, which plants we're going to do. We're going to be doing sample rehabilitations in that coconut area. So there's a lot of work to be done, but we know that we can leave actually the beach, the mining areas in a better position than what they are today. We're absolutely confident of that. I think that's about it. Ben, is there any key ones I missed? Okay, well, thanks everybody for your time, and for those that are already there, hopefully this is encouragement for you to top up, and those that aren't, I think there is an enormous opportunity here, and I would love to welcome you all as shareholders, and our AGM is in the next hour, I think. It starts in 20 minutes. So I'm looking forward to meeting any of you that turn up to it. Alessandra, back to you.
That's great. Well, Greg, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. On behalf of the management team of Capital Metals PLC, we'd like to thank you for attending today's presentation, and good morning to you all.